Welcome back to the channel. Dogecoin has suddenly caught traders' attention after posting a noticeable rebound over the past day. At first glance, many investors might assume that some major announcement, partnership, or positive development is pushing the price higher. However, when we look deeper into the market data, a very different story begins to emerge. The recent recovery appears to be driven far more by technical market conditions than by any new fundamental catalyst. In today's video, we are going to break down exactly what happened, why Dogecoin bounced from recent lows, what the key indicators are telling us, and whether this move could be the beginning of a larger recovery or simply a temporary relief rally before the next major trend decision. Make sure you watch until the end because the data reveals some important clues about where Doge could be heading next. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. Over the last several days, Dogecoin experienced significant selling pressure. The coin had been falling steadily, losing a large portion of its value within a very short period of time. During this decline, many investors became increasingly concerned as Doge approached price levels not seen for many months. The market sentiment surrounding meme coins also remained weak, adding further pressure to the price action. Despite this negative environment, Dogecoin suddenly managed to bounce from the lower support area. The token moved from approximately $0.0803 to $0.0846, producing a gain of roughly 5.30% within a relatively short period. While a 5% move may not sound extraordinary in the crypto market, it becomes much more significant when it occurs immediately after a steep decline. One of the biggest reasons behind this bounce appears to be the condition known as being oversold. In technical analysis, traders often use indicators to determine whether an asset has fallen too far, too quickly. One of the most widely used indicators is the Relative Strength Index, commonly known as RSI. When the RSI reaches extremely low levels, it suggests that selling pressure may have become excessive and that a temporary recovery could occur. Recent market data showed that Dogecoin's daily RSI had dropped into extremely low territory near RSI 19. Such readings are rarely seen and often indicate that traders may have become overly bearish in the short term. When markets become excessively pessimistic, even a small amount of buying activity can trigger a noticeable bounce. At the same time, Dogecoin was approaching an important support zone near 8 cents. Support levels are areas where buyers have historically entered the market and prevented further declines. Because many traders monitor these levels closely, they often become self-reinforcing. As Doge approached the support area, buyers began stepping in, believing that the downside risk was becoming limited compared to the potential upside opportunity. This combination of strong support and oversold momentum created an environment where a rebound became increasingly likely. Traders who focus primarily on technical analysis started identifying potential opportunities around these levels. As more participants recognized the same setup, buying activity increased and helped push the price higher. Many market observers noted that the 8-cent region had repeatedly acted as an important demand zone during previous months. Every time the price approached this area, buyers showed interest. Because of this historical behavior, traders were already watching the level long before the recent bounce occurred. Another factor contributing to the recovery was the behavior of leveraged traders. The broader cryptocurrency market recently experienced a major liquidation event. During periods of extreme volatility, traders who use leverage can be forced out of their positions if the market moves against them. This process often creates additional selling pressure because positions are automatically closed. Over a very short period, the crypto market witnessed enormous liquidations across multiple assets, with more than $1.03 billion in leveraged positions wiped out. Dogecoin was no exception. A substantial amount of Doge-related leverage was also liquidated, totaling around $140.10 million. This is a very large figure for a meme coin and shows how aggressive the selling pressure had become. When large liquidations occur, the market often enters a phase where selling pressure begins to exhaust itself. Once the majority of forced sellers have already exited, the remaining market participants may find it easier to push prices higher. This phenomenon frequently creates what traders call a relief rally. A relief rally does not necessarily indicate the beginning of a long-term bullish trend. Instead, it represents a temporary recovery that occurs after excessive selling. The market essentially pauses, stabilizes, and then moves upward as traders reassess conditions. This appears to be exactly what happened with Dogecoin. After a wave of aggressive selling and liquidations, the market reached a point where sellers became less dominant. As the price stabilized around support, buyers gained confidence and began accumulating positions. Another important concept to understand is short covering. Short sellers profit when prices decline. However, if the market suddenly begins moving higher, those same traders may choose to close their positions to protect profits or reduce losses. Closing a short position requires buying the asset back, which creates additional demand. As Dogecoin started recovering from its oversold condition, some short sellers likely rushed to close positions. This additional buying pressure may have amplified the rebound and contributed to the sharp upward movement seen over the last day. Market participants who closely monitor order flow also observed intense activity around the support zone. Both buyers and sellers were reacting quickly to price fluctuations. Rather than a slow and steady trend driven by major news, the movement appeared to be heavily influenced by short-term trading activity and technical positioning. While the recent bounce has attracted attention, it is equally important to examine what did not happen. In many cases, major cryptocurrency rallies are driven by significant announcements or developments. These can include partnerships, technological upgrades, regulatory breakthroughs, or increased adoption by large companies. However, during this particular period, there was no major Dogecoin-specific catalyst that clearly explains the price increase. No groundbreaking protocol update was announced. No major corporation revealed plans to integrate Dogecoin payments. No significant partnership emerged that could fundamentally change the long-term outlook for the project. Many investors also look toward Elon Musk whenever Dogecoin experiences unusual price action. Historically, Musk's comments have influenced market sentiment around Doge. Yet during this recent rebound, there was no widely recognized announcement, tweet, or business decision directly linked to Dogecoin that could explain the move. This absence of major news strengthens the argument that the rally was primarily technical in nature. When prices rise without a corresponding fundamental catalyst, traders often become cautious about assuming that a long-term trend reversal has already begun. Looking at the broader market environment provides additional context. Cryptocurrency markets have recently faced significant macroeconomic uncertainty. Concerns about monetary policy, interest rates, and overall risk appetite have weighed on investor sentiment. Bitcoin itself has struggled to maintain key levels, creating pressure across the entire digital asset market. When Bitcoin weakens, alternative cryptocurrencies often experience even greater volatility. Dogecoin has been affected by this environment just like many other assets. The recent rebound occurred against the backdrop of broader market weakness rather than strength. Another challenge facing Dogecoin is the ongoing shift in investor preferences. Over time, many traders have moved away from older meme coins in search of newer and more speculative opportunities. This rotation of capital has reduced some of the excitement that previously surrounded Doge during its strongest rallies. Market sentiment toward meme coins as a whole has also cooled compared to previous cycles. During periods when investors become more risk-averse, speculative assets often struggle to attract significant capital. This trend has created additional headwinds for Dogecoin over recent months. From a technical perspective, several important levels remain worth watching. The support zone around 8 cents continues to be critical. As long as buyers successfully defend this area, the market may continue attempting short-term recoveries. On the upside, however, resistance remains a significant obstacle. Previous price action suggests that higher levels could attract renewed selling pressure. For Dogecoin to establish a stronger bullish narrative, buyers would likely need to reclaim and hold key resistance zones while generating sustained momentum. Momentum indicators remain mixed. Although the oversold condition helped trigger the recent rebound, indicators alone cannot guarantee continued upside. Markets often experience temporary recoveries before resuming their previous trend. This is why traders continue monitoring volume, price structure, and overall market conditions, rather than relying on a single signal. The decline in open interest across Doge derivatives also tells an important story. Open interest measures the total value of outstanding futures contracts. A significant reduction in open interest suggests that many leveraged participants have exited the market. While this can reduce immediate downside pressure, it also indicates reduced speculative activity compared to previous periods. Lower leverage can create a healthier market structure over time, but it may also mean that explosive rallies become less likely unless fresh demand enters the market. Investors should therefore pay close attention to whether new buyers are entering the ecosystem or whether the recent recovery is simply a temporary reaction to oversold conditions. As we evaluate the evidence, the picture becomes increasingly clear. The recent move appears to be driven by a combination of oversold technical conditions, strong support, liquidation-driven market resets, and short-covering activity. These factors can produce powerful short-term rallies even in the absence of major positive news. The key question now is whether buyers can build on this momentum. If Dogecoin manages to maintain support and attract additional demand, the recovery could continue. However, if broader market weakness persists and buying interest fades, the recent bounce may eventually prove temporary. In financial markets, sharp recoveries after steep declines are common. They often create excitement among traders who hope that a new bull trend is beginning. Yet, experienced investors understand the importance of separating technical rebounds from genuine fundamental shifts. At the moment, the available evidence suggests that Dogecoin's latest move falls into the first category rather than the second. To summarize everything discussed today, Dogecoin's recent rise appears to be a classic relief rally that emerged after an extended period of heavy selling pressure. The coin reached a major support zone near 8 cents, while momentum indicators entered deeply oversold territory. Massive liquidations across the broader crypto market helped clear excessive leverage, and short covering added further fuel to the rebound. Importantly, there was no major Dogecoin-specific announcement, partnership, or adoption news driving the move. For now, the recovery looks primarily technical rather than fundamentally driven. Traders should continue watching key support and resistance levels closely because the next major move will likely depend on whether buyers can maintain momentum in an otherwise uncertain market environment. Thanks for watching. If you enjoyed this video, make sure to like, subscribe, and turn on notifications so you never miss the next update. See you in the next one.